Well, happy St. Patrick's Day to everyone on March 17th. A year has certainly passed in the world that we're in today. Thank you all for joining us today for a fireside chat from the Venture Center. I'm Wayne Miller, the Executive Director of the Venture Center, and today we are joined by George Makris, who is the Chairman and CEO of Simmons First National Corporation, we also know as Simmons Bank. I want to just start by thanking our program sponsors, of which Simmons is one. Thank you guys so much for that. Frost Accounting, Wright Lindsay Jennings, and the Little Rock Regional Chamber. And before we begin today, I'd like to ask Collins Andrews, who is a board member at the Venture Center and also has been our executive in residence representing FIS for the past 6 years with our accelerator programs. Collins, let me hand it off to you to introduce George, please.
Okay. Thanks a lot, Wayne, and I really appreciate the opportunity to introduce George. Simmons Bank means a lot to me personally. It's been our family's bank for literally 4 generations, so we watch them closely. And when we started hosting accelerators, when FIS and the Venture Center got me to work with them to do that, Simmons was the first bank to respond to our request for participation, and they've participated in all of them since then. So, what we've seen from that is there's a true willingness on the bank's part to be progressive, to help small businesses, to be competitive and to grow and to give back to the local community and even the software community. And I really think that reflects directly on the leadership that's coming from George Makris. George, he's led an aggressive growth strategy for Simmons. He's been CEO now for 8 years, and the bank has grown from assets of $2.1 billion serving 3 states to now over $21 billion serving 7 states. So previously, George worked for his family's business, which is a business I'm familiar with. It's MK Distributors from Pine Bluff. And he was president of that business from 1985 to 2012. But in the same time, he was also a banker. He was a board member of Worthen Bank and its successors, and then moved on to the board of Simmons Bank. And from the results that we've seen, it's obviously George is successful at leading growth, but his banking philosophy centers around community banking. And we really see that from Simmons. George has a belief in an active and strong community involvement. Looking at his bio, it lists 11 different educational, business development, and medical organizations where George has been, or either is now or has been a senior leader. He's a graduate of Rhodes College in Memphis, has a master's from the University of Arkansas. And he just told me to introduce him as a beer salesman that's impersonating a banker. And he is that. I mean, he is a good beer salesman. But I think I'll leave it that George is an outstanding leader. He's a community champion, and he's a great role model. So please welcome George Makris to the Fireside Chat with Wayne Miller.
Thank you, Collins, and George, welcome. It's great to have you here. I guess probably the pending question I have to ask is, on any given St. Patrick's Day, how many gallons of green beer did you sell?
Oh gosh, more than I could drink.
That's probably
let me say that a lot. It took us a little while to figure out how to make that keg green, but we finally concluded that hypodermic needle works real well through that plug in that keg.
Well, so, they do a heck of a job in turning that river green in Chicago, but let's get about the business. And again, I'm really grateful to have you here with us today. Also, once again, grateful for your partnership and support. As Colin says, your support of the community, we feel directly, and we're grateful for that. As you know, we in our fintech programs interact with literally hundreds of bankers on a day-to-day basis who historically, as we know them, have come up very much the traditional route as it relates to getting into senior leadership roles, CEO roles, et cetera, like yourself. And they're not a group of folks who were accustomed to taking a lot of risk. It's, in fact, they're trained to be just the opposite, right? And I wonder so much about your background and story. Your father started and founded MK Distributors, which, as Collins mentioned, was a wholesale beer and liquor distributor back in 1964. So you fundamentally grew up in that business with a father who I'm going to make the assumption was an entrepreneur, which is what our business is about here at the Venture Center. What did you think? How did you get into the family business? And did you think you'd sort of follow in his footsteps? Talk a little bit about that journey, if you would.
Okay, I'd be happy to. First of all, let me thank Collins for the introduction. And, Collins, I say this all the time, and I think it's partially true. Everyone is from Pine Bluff. Collins has some deep roots down in Pine Bluff, and you'd be surprised if you talk to someone long enough, you're going to uncover some relative that has some connection to Pine Bluff, Arkansas. It's just an amazing little tidbit there. Well, Wayne, thank you very much for having me today. I really appreciate it. And what y'all do at the Venture Center is extremely important. Our customers' habits are changing, and what you're presenting to the public is very, very important. We've seen just an amazing growth in digital adoption by our customer base, and it really is changing the way we do banking today. So thanks to you and the Venture Center for what you do and having me today. My dad was an incredible person, and I have to go back one more generation. My grandfather actually came to this country from Greece, and he and three other Greek gentlemen were the real entrepreneurs. They set out in several businesses, some of which succeeded and some of which failed in Pine Bluff. Their final endeavor was OK Ice Cream and Candy Company. So they actually built a dairy processing facility on the property where our art center is in Pine Bluff today at 8th and Main. And I can still recall going down, especially at Christmas time. Gus Pappas was the candy maker, and he made a special peppermint candy at Christmas, and I was the official quality control tester during that time. But I also got to stand inside the big glass wall that faced Main Street and watch the Christmas parade in warm weather instead of outside in cold weather. So fond memories of that. My dad did not intend to be working in the family business, but an untimely death of his father and the other partners sort of required him to come back and manage the family business. And he did a great job, and they ultimately sold that business to Coleman Dairy. So the Coleman family and the Makris family have ties that go way back. And my dad did start MK Distributors along with my uncle, Frank Compuris, and you may know my cousins, Dean Drew and Catherine Ann Trotter, live here in Little Rock. They're still partners in that family business. So it still thrives today. And I have two sons that manage that business on a daily basis. I have to go down and take inventory occasionally, make sure they haven't consumed all the profits, but it's still going well. I'll tell you, I learned a few things from my dad that some good, some scared me to death. One is he had an incredible work ethic and discipline. And there are a couple of things that I can tell you that would describe his discipline. In our home, we had my mother, my dad, and three children, and one bathroom. My dad would get up at 4 o'clock every morning, go in to take his shower. We must have had the smallest hot water heater in Pine Bluff. But he would go in, turn the water on, get wet, turn it off, soap up, turn the water back on, rinse off, and get out of the shower. And I still remember his toothpaste. He would roll it up to get the very last drop out of the toothpaste tube. So those kinds of disciplinary actions taught me a lot. I hate to admit that I hadn't followed any of them in my lifetime, but I was amazed that he was able to do that. I'll tell you one more fact about my dad. He was a very dedicated guy, and Rotary was his passion. He had 40 years of perfect attendance at Rotary Club. And I tell you, the greatest pressure relief I ever had in my life was when I missed my first Rotary Club meeting. It took all the pressure off. But he was a very dedicated guy. And I tell you, some of that has stuck around, and I still recall that in my day-to-day activities. You know, running a family business is a little bit different than running a publicly traded company. We were obviously much smaller than Simmons is today. All of our associates and their families were very close. And it really was a true family feel. I think one of the things that made a real impression on me during that period of time was the obligation we had as principals in that business to provide for those folks who contributed to the success in their entire lifetime. So our programs were built around career paths at MK Distributors, but also retirement plans. So our feeling was that if we had someone who gave their lifetime career to the success of our family business, that they ought to have many of the same benefits that we might have if we retired as owners. So our retirement plan was very rich. We had folks that, you know, never made more than $50,000 in their career retire with over $500,000 in their retirement account, which was a big, big deal. We were very proud of that. And I think still to this day, we have our Christmas party and we invite all the retirees back. And now they outnumber the number of associates that we have at MK Distributors. It was that sense of family, if you will, that was very ingrained on me, because that was something my dad felt very strongly about. And I still think it's one of the formulas for success.
It is amazing what we can accomplish with a great team, because we can really accomplish anything. And
That's right.
you know, I some people take exception to this comment at times, but we're often asked in leadership roles, what are more important, our customers or our people? And I've always been able to answer that, because I think our customers, if we take good care of our people, have a wonderful journey and a great experience with that. And I think we care for both of them. But that is a fantastic story. Obviously, frugality was learned through the toothpaste, right? So that's
That's right.
that's great stuff. That's
Yeah.
great stuff. Thank you for the insights. You know, one of the things I like to talk about a little bit is scaling the business. But before we get in that, because clearly you've been able to do that so effectively at both the MK business as well as at Simmons. But you know, as a young person, I think you aspired to play sports. You were an athlete, both football and baseball. Suffered an injury along the way. Probably had to make some different decisions at that point. And whether to kind of return to the family business, go on to law school, as I understand the story, and if I stand to be corrected there, please do. But what decided you to return to the family business versus the pursuit of law school?
You know, Wayne, I sort of look at my college days as a 4-year vacation, because I was pretty sure when I went to college that I was going to come back and work in the family business. And I saw a lot of my friends who really didn't know what they were going to do, and the pressure that they felt in college to find their career when they got through was something I never really had to experience, because it was pretty clear to me what I was going to do when I left college. So I got to enjoy college athletics, even at a Division III level. I tell everyone it was barely one step above high school. I did get injured my sophomore year playing football that jeopardized my baseball career. So I gave up football and stuck with baseball. But the biggest injury to me was to my ego when I figured out that that was really as far as I was going to go in athletics. And I think that's a reality that sets in with 99.9% of everyone who aspires to be an athlete. And I tell you, It reminds me the same way every time I go to the golf course. I'm never going to be any better than I am today. So anyway, it was a great experience for me. So when I left undergraduate school, I immediately went to the University of Arkansas and enrolled in their MBA program. And at the time, because I had gone to a liberal arts school and had a general business background, I was exempt from half a year of the graduate program. So I actually got through my MBA program in a year and a half. And I came back that summer and told my dad that, I think I'm going to go to law school. And he looked at me and he said, son, I think you've been in school long enough. So that's really why I didn't go to law school. However, I did finally go back to law school. Two of my friends and I decided after we were married that we were going to go to night school. So we came up to UALR when I was still at the old law school here and went to night law school. Did that for a year, and then our first son was due to be born in September of the following year. There was a very strict attendance requirement that I couldn't meet and have my first born child. So I decided that I was not destined to be a lawyer, and that was into law school for me. I learned just enough to be dangerous, and thankfully I learned to call a lawyer when I have a legal problem. So that's a little background on how I ended up firmly in the family business.
Fantastic. Great stuff. So 27 years, I think, at MK Distributors, and nearly 8 or more than that at Simmons. In the course of our work here, we often come in contact with entrepreneurs who have started businesses and got them to a certain point. Getting to 10 people is one thing, getting to 100 is the next, and scaling businesses beyond that is a set of skills and challenges that are sometimes fraught with some failure. Sometimes businesses crash and burn, and sometimes they're remarkably successful. And I think as we reflect on your career and the success you've had with both the family's business for 27 years, as well as since you've been at Simmons, is your capacity to scale businesses. And love to hear your thoughts around that and the challenges and also the successes that you've enjoyed there.
Well, you touched on this earlier, Wayne, and that is if you're surrounded by good people, you usually make good decisions. And that's happened both at the family business and here at Simmons. As Marty Castile and I used to kid each other, if we knew then what we know now, would we have done the same things? And maybe we would have, maybe we wouldn't have, but ignorance was bliss back then. And we thought we could, we thought we could slay the world. But I'll tell you, I think the most important thing that's gotten us to where we are today is to recognize that we don't have all the answers. We recognize the opportunity, but we need to understand how to take advantage of that opportunity. Let me go back a little bit. My time and my experience with Anheuser-Busch taught me a really good lesson. I was fortunate enough to be for a period of time on the Anheuser-Busch wholesaler panel. And I got to know the leadership at Anheuser-Busch really well. And boy, they ran a great organization. But over time, they became adverse to risk. And it came back to bite them. They're a part of InBev now. And they were bought several years ago. Well, the story behind that is that Anheuser-Busch was actually going to buy InBev, but the short-term results didn't meet the expectations of the street, and Anheuser-Busch walked away from that transaction. And then all of a sudden, currency flipped, and InBev became in a position to buy Anheuser-Busch. So what turned out to be a process where Anheuser-Busch was going to be the controlling entity came back in reverse. And the Bush family left the business. InBev took over Anheuser-Busch, and it was an opportunity missed. So I think what I would say about our growth here at Simmons is we have recognized really good opportunities along the way. You see the results of 13 acquisitions over the last 6 or 7 years. What you don't see is the other 50 or so opportunities we took a look at that really didn't fit very well into our organization. And each step along the way, we've recognized the next level of expertise that it's taken to run the company efficiently and effectively and within our risk appetite. We were asked yesterday on an associate call, we do this once a quarter, by one of our risk managers, what it meant for us, the fact that Julie Stackhouse, the former head of supervision for the Federal Reserve in St. Louis, had recently joined our board. Well, Julie was our regulator during this entire growth period, and quite honestly was a great guidance counselor, if you will. We ran stuff by Julie before we ever made a decision. So I felt like Julie had helped us grow up. And the fact that she accepted a position on our board was really gratifying to our whole company, because I think she understood the potential that the company had, but also understood that over the period of time as we've grown, we've established the appropriate risk metrics and risk management that she could feel comfortable being a part of this organization on the inside instead of on the outside. So I think recognizing the opportunities, recognizing the next level of skill set that's appropriate to take you to the next level has been a real key for success here at Simmons. And if you look at our associates, it all started with Jenna Compton, who is our chief people officer. As we started growing, we knew we needed really, really strong human resources programs, and Jenna's come in and done a fantastic job. But Paul Kahneman, who you know really well, came to us from Grant Thornton. We knew Paul because he was a consultant to the company. Our new chief digital officer came to us from BBVA after a very storied career there. So we've been able to go out and attract talent to join our team when it was appropriate to take the next step. And I think that's extremely important.
Thanks for that. We know Julie because we have the pleasure in our nonprofit status of being able to work closely with the regulators. And I can tell you that her interaction in our programs has just been extraordinary. She's very gung-ho. And I haven't met a banker yet who said they love regulators. We actually do here because they help us be better. But one of the things I love about Julie and the work that we've had a chance to do with the Fed is how they have also been open to learning from us in the fintechs and trying to find out ways to advance technology in such a fashion that it helps make the journey for our customers, for the banks that we work with, et cetera, better, with what I think has historically been, kind of, they were the Department of No for a long time, and now they're becoming the Department of How Can We, or Yes. So good stuff. That's terrific. So is it fair to say that the capacity to be able to attract and retain people has been, and knowing the right time has been perhaps the most important wisdom that you brought from your previous world to where you are today? Going from being a distributor, obviously, as Collins indicated, your involvement with banks has been long term, but going from what you did to being CEO of a bank, I mean, that's that there's a lot of room there for change and challenge. So let me leave it at that.
Well, Collins wasn't kidding when he said, I'm a beer salesman impersonating a banker. And if I can just stay out of the way of the bankers, they do a fantastic job. I was not hired to make loans and do those kinds of traditional banking functions. But we have people who do that extremely well, and we're awfully proud of them. One of the things that I think has attracted some of our top talent here is that they're not coming into a maintenance position. And I didn't step into a maintenance position. I wasn't asked to come in and just keep doing what we had been doing in the past. And let me say, that's not a knock on Simmons in the past. One of the most well-respected banks in the country prior to my time here. And I want to point to a couple of things. One is that during the great financial crisis back in 2007, 2008, when you take a look at the value lost by the banking industry in market cap, Simmons didn't lose any market cap value. Unbelievable record. When TARP came out, you may remember that term. We were one of the first 5 banks in the country offered that relief. We didn't take it, but it was a great feather in our cap to be offered as a very solid bank that first governmental relief. So our bank was in great shape, but I got to tell you a story I tell a lot, and that is when I came to the bank on our first roadshow investor conference, I was in Connecticut visiting with a large shareholder, institutional shareholder of Simmons. And we got through with our regular presentation. I thought it had gone really well. I wasn't asked any hard banking questions during that time. And when we got ready to leave, a fellow sitting on the other side of the table looked at me and said, "You know, George," he said, "hostile takeovers aren't real prevalent in the banking business, but you're a prime candidate." And you're talking about an eye-opening experience. Well, he was absolutely right. We had a lot of liquidity. We had a lot of excess capital. We had excellent asset quality. We were not very efficient at the time, and our value in the marketplace was barely above book value. So if you recall back in the 2013 timeline, there was really no M&A going on. That was still a little early coming out of the crisis. But we had all the attributes that every bank wanted at that time. And between Connecticut and Arkansas, our management team made our minds up that we were going to do what it was necessary to remain independent and to be a top performing bank. And we came back and we made some very conscious decisions. At the time, we had 8 separately chartered banks, which meant that we had 8 boards of directors, we had 8 regulatory exams, we had 8 investment books, we had 8 loan books. Everybody's asset quality stood on its own. Well, we immediately collapsed 7 of those charters into a single bank. And then we were fortunate to have the opportunity to acquire Metropolitan Bank, which really was a transformational purchase for us. We were able to close 27 branches because of the overlap in the central and northwest Arkansas markets. That sounds like a lot, and it was, but we kept 38 branches open in that footprint. So we still had plenty of coverage. That helped our efficiency ratio quite a bit. It helped our profitability, and our value in the marketplace became very good for that period of time. And we were able to take advantage of that currency valuation by going out and acquiring banks that gave us access to some new growth markets. So the Springfield, Missouri area, Nashville, Memphis, and then later Dallas, Fort Worth, Oklahoma City, Wichita, Kansas City, all areas where we could deploy some of that excess capital and liquidity. And it's worked out extremely well for us.
Fantastic. You know, leadership is something we've seen what good looks like and what bad looks like, I think, over the last couple of years in particular. But from your perspective, as we have many entrepreneurs who are participating on this call today, and the success that you've enjoyed through obviously having the right folks around you, et cetera, is there a particular piece of advice or wisdom you would share about the importance and the responsibility and the accountability of leadership in the role that you enjoy today?
Well, yeah, there are probably several
We'll take them all.
sort of key leadership attributes that I would consider very, very important. And I would tell you, in my position, the buck stops here. And while most of my folks would tell you that I micromanage quite a bit, um, to a certain extent, that's important. Not micromanagement, to be involved in the decisions of your company and be accountable for it. Our board expects me to understand and to be able to answer their questions when something comes to mind. And the more I'm involved in all aspects of our business, the better equipped I am to be able to answer those questions and to be able to make decisions. Unfortunately, many times I have to sit as judge in this chair. So we may have a back office group that says one thing and a customer facing group that wants to do something else. And somebody's got to bring those two groups together. Well, a lot of times that falls on the guy at the top because that's where the buck stops. If I could pass it to someone, I would. I just can't. So, when you accept this role, uh, you have to understand the responsibility and the accountability that goes with it. And I would say this too, that you know, while I've gotten to enjoy all the benefits of this position, my wife may say that she hasn't had the same luxury because of some of the things that we used to do when I was at the family business that we don't do today. So it really is a family commitment. It's something that you shouldn't take lightly as a leader of an organization. It really is something everyone has to buy into because sometimes your obligation to your business family takes precedent over maybe some things that you'd like to do personally. But that is what is required, and it's a hard lesson for a lot of people to learn. We want our cake and eat it too, and sometimes we just can't have it that way.
It is, I think it's a great point, George, and thank you for sharing that with us. I think that we talk about work-life balance a lot, and I don't know about you, but I think it requires an effort every day to find that balance. And some days we get it, and some days we don't. But to your point, the obligations, and I love your comments about micromanagement. I learned an expression a long time ago, which is, we get what we inspect, not what we expect. So sometimes folks perceive that as micromanagement. Most of the people who I've heard say that they don't are the ones that do the most. But I understand it's about knowing, and to your point, what a great point about being able to be responsive to your board and the people and the street as well in your situation and the people that you're responsible to. Often with leadership comes the issue of culture, and clearly your role and your impact on Simmons over the last 8 years has also helped to direct, perhaps reshape, and inform the culture of the organization, because we believe that starts with the actions and the accountability at the top, as we've discussed today. Can you just briefly talk about that? And also, let me just say one other thing is that we've got about another 10 minutes here of conversation, and I would love the audience to start thinking about some questions for you directly. So let me put that out there as well. But your thoughts on culture?
Well, it all starts with culture here, and that's why Jenna has been so important to our organization. We are now have cobbled together 13 different banking organizations. If we take a look at Simmons and what we would call legacy Simmons, we're in the vast minority of this new organization. And it was very important early on as we were growing for us to define our culture. Because when we take a look at a potential merger partner, if we can't get past the culture fit, nothing else matters. And Jenna and her team did a fantastic job of using focus groups throughout our organization to actually define our culture. So when we go visit with a new associate or a new merger partner, we can tell them what's important to us. And Jenna actually does a gap analysis of a new organization. So we take our culture cornerstones, we ask their associates how they think their organization fits into that. So we know if there are any gaps that we have to fill. Um, so empowerment, those kinds of things are extremely important. We are a community bank. That means we want to make decisions at the local level. If an acquired bank doesn't feel that way, then we've got a problem. So culture is extremely important. We think we do a really good job of defining our culture and hiring to our culture. Um, I would say that one of the most gratifying awards that we can get is when we are selected as a best place to work. Uh, and I'll just say, because we're in the Arkansas Business Best Place to Work uh, contest, if you will, we've been awarded that 3 years in a row. And 75% of that award comes from input from our associates. That is really gratifying to me. You know, I can sit here and believe that we're doing a good job, but when our associates say that we are, and third parties recognize that this is a great place to work, then that sort of puts the gold stamp of approval on the program that we have in place. And you know, it's ever evolving. We're always coming up with new programs for our associates. You know, when Jenna decided that we wanted to have pet insurance, I sort of scratched my head and never heard of that. But, you know, it's a pretty popular benefit here. And those are the kinds of things I think that sort of set us apart. Yeah, we're bankers on a day-to-day basis, but we like to have a little fun, and certainly want our associates to look forward to coming to work every day.
Good deal. Thank you for that. That's awesome. I didn't know about pet insurance. I'm gonna have we all. I think all our team all have pets. We're gonna have to look into that now. So
That's right. That's right.
um, you know, it's hard not to have a conversation and reflect on the past year, but I know Simmons, as with many community banks, has been incredibly impactful to this community and beyond as it relates to helping to make sure the resources that we have needed to continue operating, to be in business through the PPP program and so forth, CARES Act. And I don't know, I'd love to know statistically kind of what you all have done during this time and continue to do as we get into obviously the second round of this. I know we have worked with you to that degree, and it's been extraordinary. You are in fact our bank, and we love you for that. And so, you know, a year ago, you were trying to get this figured out, and you guys have it pretty well dialed in today. So love to sort of think about this thing that happened called a pandemic a year ago. And as a leader, you're like, okay, we're shutting businesses down. All these things are happening. The SBA presents these opportunities. You were in the war room, I'm sure, at that point. Love to hear about that journey and what you all have accomplished in the last year, and how you've supported this community and beyond.
Well, thank you, Wayne. We're very proud of the part we've played in helping our customers, not only business but consumers, during this pandemic. It's been extremely important. And let me say, for all the flaws that the PPP program has, it was a breath of fresh air, and it came at just the right time. You know, it started out as a substitute for unemployment. Everybody forgets that because it's sort of morphed into something different than that today. But therefore the name, payroll protection. We made over 8,000 PPP loans totaling $1 billion during the first 3 months it was offered in the marketplace. And that was a whole new process to start from scratch. And I can't tell you, we had folks from all over the footprint, not anywhere associated with our lending program, volunteer to get involved. And without their help, we couldn't have processed what we did. And that program's going extremely well now. We've probably got 30% of those whose loans have been forgiven, several more whose applications for forgiveness are in process. And we don't expect any problems having that entire amount forgiven by the end of this year. PPP2 was a little bit different. Those that got loans in round one had to show a need in round two from a revenue perspective. Fortunately, many of our customers in round one didn't have that same need in round two. But as of today, we've probably made another 2,500 PPP loans in round two, probably for $250 million this time around. A lot of them new entities, many of them nonprofit organizations that were either unsure of their eligibility the first time around or just flat missed it because the first round of money ran out. So we are still very active in that arena today. A very good program. You know, the consumer programs have been just as good. We have forgiven a lot of overdraft fees during that period of time. We have made it a point that none of the stimulus money went to any bank fees. So 100% of that money was available to the consumer to utilize for their everyday needs. We have deferred mortgage loans for up to 6 months, and we're still doing that through June of this year. So we have really tried to be good corporate citizens with regard to making sure that no one fell on hard times just because of the COVID situation. We were confident that at some point in time, that hardship was going to end. It looks like we can see light at the end of the tunnel. And we were just happy to be participants and be able to do our part.
Thank you. That leads to my final question, and then we'll get some from the audience who are participating today. Giving back to the community has been a way of life for you. Everywhere you've been, you know, recognized obviously as a top influencer in the state of Arkansas, your service on many boards, universities, and health institutions. Speak to the importance of that from your perspective to, again, other leaders and participants on our call today. Love to hear your thoughts on that, please.
Well, I would say that started obviously in our family business where, you know, we're licensed to do business in a certain area. I consider that a great privilege. I consider our ability to operate as a regulated bank a privilege. With privilege comes responsibility, and we are responsible to those folks that help make us successful. And while I would like to say it's all purely philanthropic, it's not. I mean, there's a true business reason that we should be actively involved in the community. If the community grows, our business stands a chance of being more successful. And what I've found over the years is that if if our organization supports interests that are broad-based, and therefore our consumers have the same interest, we're creating a bond outside of our normal arm's length business transaction that increases loyalty to our institution. And, you know, what's more important than consumer loyalty in the business that we're in? So, you know, there are a number of reasons that businesses and individuals ought to consider their obligation, in my opinion, to be a part of the community with whatever talents you have to offer, whether it be monetary, your time, your skills, or your leadership, or all of the above. It's, I think it's table stakes, to be honest with you. I don't think we're doing anything that we shouldn't be doing.
Fantastic. Thank you. Thank you. Thank you. Thank you, George. You're an inspiration without question, and a leader and a mentor, and a man of great wisdom. Where we appreciate you being with us today. Let me take a stop there, and let's take a couple of questions from the audience. One was, you talked about the positive things about Simmons' success and growth. Were there any particular pitfalls or struggles? Maybe we should take the last year out of it, although that's certainly been a challenge. We've talked about that. But as you've gone to grow the organization, have there been maybe an example or two where you had some challenges?
Well, and our associates who are involved in the conversion efforts will understand this very clearly. Every conversion, so when we take one bank system and move them into Simmons systems, that is always a problem. Okay, it doesn't matter, the best planning goes awry. I'll tell you one story. When we bought First State Bank in Tennessee, they had offices from Memphis to Knoxville. And we made a decision at that time, because all of their office equipment was brand new, that we were not going to replace that, which was our traditional way of ensuring that things worked. So we got there on day one, flipped the switch, and not a printer worked, not a copier worked. We couldn't print loan documents, nothing. And what we found was that the chip in each one of those machines was one release behind. And we had to go physically to every machine across the entire company and change one little chip so they could print loan documents. So those kinds of issues crop up in every single conversion. People just cringe when I walk in and tell them that we've acquired another bank, because they know what's getting ready to happen. So I would say in every case, that's been a real issue. With regard to issues that we weren't able to overcome easily, or that we didn't recognize as a potential risk, I'm going to knock on wood and say we've had none of those. And I attribute that to our diligence team, who is responsible for going into those acquired banks and making sure that they understand what the risks are and how we're going to mitigate those. Biggest challenge we had was in Columbia, Missouri, where we converted Landmark Bank at the end of last February, just before the pandemic hit and everything was locked down. So we were just getting the Landmark associates trained on Simmons systems, and then we shut all the branches down. And you talking about chaos in the marketplace, it really was. But our folks persevered, and they did a fantastic job. So there are always issues like that, Wayne, that we know that we're going to face, but our folks just suck it up and get the job done.
So part of the resiliency and the culture of Simmons, clearly, that's pretty awesome.
Right.
One of the folks asked that said that you're a great inspiration to all. Where do you find your inspiration? It's a great question.
Well, that's a good question. Obviously, my family's background and their willingness to persevere means a lot to me. My wife's family also, I don't know if you knew Don Kirkpatrick or Quality Foods, but that's a Kirkpatrick family business. And you talking about a guy that took risk and made it work. That was Don Kirkpatrick. So I think it sort of runs in our family's blood. But I've been very fortunate to be a part of teams all my life, and particularly athletic teams. And for those who haven't experienced what that means, it is an experience like no other. You learn to accept wins and losses together as a team, and you learn not to let those losses linger very long, because there's always tomorrow. And I've had some great coaches, teammates, that have taught me a lot during that period of time. And the thing that they taught me was I never have to do it by myself. And that's the case at the family business. That's the case here at Simmons. We're all just a part of the team. We have different roles that we play.
Thanks for that. Next question is, as a public institution, do you see changes in the overall market's measurement of success other than the traditional quarter-to-quarter financial performance?
Well, we're starting to. Things that were on the periphery are starting to be front and center today. Diversity is one of those. ESG, environmental, social, and governance issues are starting to be important with investors. I think for the time being, that's probably going to be centered on public companies, not so much on banks, because the environmental side of ESG is not something that we necessarily directly control, but we're starting to get questions about lending priorities. Do we lend to energy companies? Do we do this? Do we do that? Do we have any special programs for minority businesses? Well, obviously we do. We're a little bit ahead of the curve because of the Community Reinvestment Act, CRA, that's been a part of banking for a long time. We're very fortunate that we do that extremely well in all the markets that we serve. So we're a little ahead of the curve. The rest of the country has a little catch up to do. But instead of just how much money are you making, these social issues are starting to become more and more prevalent. And we're very cognizant of that. The banking industry is not one that just has an abundance of ethnic minorities in it. We've got to develop that internally. If we had a goal here at Simmons that we wanted to hire ethnic leadership, it's just not available in the banking industry today. We've got to establish programs to give those minorities opportunities to grow inside the organization. And we've got to be patient and understandable while that growth is occurring. So, yeah, we're starting to see some peripheral issues outside of just profitability that are extremely important to the growth of our company and how it's perceived in the marketplace.
Thank you. We're pretty much done from the questions of the audience, and I'd like to ask you kind of one final question, which is, it's a little along the line, if you had to tell your younger self what your older self knows, but maybe a little differently asked, is to people who are starting a career coming out of college, those who are struggling with businesses today, people where your wisdom can be impactful. Is there a particular sentence or paragraph or piece of advice that you might share with them personally to help give them some guidance and mentorship?
I figured we were going to probably get a question, something like that today. And I tried to think back of, maybe some principles that I thought were extremely important that helped me develop along the way. And I have two or three that I think are important and help me along the way. One is, you never quit learning. I learn something new every day. And when you lose a desire to learn something new, might be the end of your career, actually, because somebody's going to bypass you. So I think a lifetime of learning is something that you have to accept if you're going to be in a leadership role. The second is preparation. And as a result of preparation, confidence. And I think those two things are extremely important too. Sometimes I have to be confident when I'm not prepared, and that scares the heck out of me. So I would advise you to prepare before you have to be confident. Most of the time I'm able to do that. And I feel very comfortable in my decisions. They don't always turn out a appropriately, because even the best plans, you know what they say
You know what
about
they
that.
say, sure.
But without those plans, I'd be a lot less successful than I am today. So sort of words of wisdom, keep learning, be prepared, be confident.
Don't practice on game day, right?
That's right.
That's it. George, can't thank you enough. Collins, thank you for being a part of this today with us as well, and giving George the intro and for the great work that you do with us here. George, you're an inspiration to many. We are so privileged to have you with us today. Again, thank you for your partnership, for sharing your story and the great work that Simmons is doing to make Arkansas and the surrounds better, and particularly at what's been such a challenging time for our nation, and the support that you guys were challenged to stand up rapidly to infuse the necessary resources into our communities and our businesses and people personally. I want to just thank once again Simmons Bank, Frost Accounting, Wright Lindsay Jennings, the Little Rock Chamber, of your support of the Venture Center and Fireside Chat. And I want to also thank my team, Ashley, Mimi, Molly, Becky, and all who, George, like you, I'm fortunate. I've got great people around me who make me look fantastic. So I'm a very, very lucky guy, and I'm grateful for their efforts and what they do for our community. And thanks to everybody. Have a great St. Patrick's Day.
Hey, Wayne,
safe.
one more thing before we
Please.
I can't miss this opportunity to thank you, the Venture Center, and Collins Andrews for your business. We appreciate it very much.
Amen. Thank you, George. Lessons learned there as well, for sure.
Okay.
Yep, that's it. Well, thank you all. Have a great St. Patrick's Day. Be careful. Don't be super spreaders, right? And go wash your hands. Talk to you soon. Thank you all.
Okay. Thank you.
Thank you,
Bye.
George.